I'm Jessica Leewen, Director of Marketing at Upside Avenue. Thank you for joining us for Upside Insights, where we check in with investment experts to get their opinions on how we can live our upside. I'm here today with CEO of FundX, Janet Brown. Janet, thank you so much for joining us today.
Pleased to be here, thanks.
How are you doing during these pandemic times? Have you learned anything new while being stuck at home?
Oh my goodness, I've learned so much, Jessica. It's surprising to me that it took me a few months really to figure out that I really needed structure and organization. I'm so fortunate to have a lot of flexibility. I have two homes, one in the Napa Valley, one in San Francisco Bay. Going back and forth, I really found that I needed a container and some rules for myself. And as I'm speaking now, I'm realizing it's just like investing. It's just like I've been telling my investors for decades. We have so many choices often to determine in advance your goals, where you're going, and then set out how to get there is going to make it so much easier. And I had to learn this myself. So now I'm set. I'm really sheltering in place has provided a lot of lessons, though.
Yeah, I think a lot of us had to kind of find some balance and a new normal during this pandemic. It's new for everyone. So.
And the slowing down is, I've been kind of a go all my life, and the luxury of time. When I started out, I thought, thank God, I'm finally going to get caught up. Well, working harder than ever, but in new ways. And I think the mega trends that were in place are accelerating. So much information coming at us. It's very exciting times.
Well, that's interesting. You talk about trends. Something that has been gaining more and more attention is the concept of impact investing. Can you tell us what that is?
Sure. Of course, all investments have impact. They always have. But the awareness of the impact is increasing, which is exciting. In the old days, I started in this field over 20 years ago, where, it was called socially responsible investing. And in those days, the attempt was to divest from the worst offenders, possibly tobaccos, weapons of mass destruction. Some do-gooder types just didn't want to participate in those things. Well, it's really been an exciting evolution over the last 20 years, whereas now people realize that this is a risk management tool. This is really a way that we can assess the dangers of a company in their environmental, social, and governance areas. You're going to be hearing more and more about ESG. It was actually a concept popularized by the UN and Kofi Annan in 2004. People are realizing not only that everything has impact, but there are ways to measure it. So most companies now are reporting and being rated on, again, their environmental impact, which is fairly easy to understand. Social would be things like how you treat your workforce. Governance would be things like diversity on boards, or I could talk for an hour just about those three things, but just so investors know that it's really a risk management tool, and it's a way to assess how companies are dealing with these issues.
Okay. So, it sounds like there are many different areas companies can choose to achieve, a better or more sustainable future for all. Everything from, like you said, climate, environmental type purposes to social justice, governance, education, poverty. I think there's a whole slew of different concentrations of that investors and companies can target. What what are investors interested in? Is there one area that you see that investors are more attracted to now than others?
Yeah, well, of course, social justice is huge now. Prisons, for instance. Our strategy does not invest in for-profit prisons because, or things to do with those, because um, there's been a lot of press about prisons keeping their inmates and employees safe from the virus. Um, Private prisons have been some of the worst performers in the markets lately. In fact, scoring companies, I'm going back to ESG because it's noteworthy that if investors had been aware of ESG scores of some of these public companies, they could have avoided the worst disasters in many areas, from financial services, how customers are being sold, to airplane safety. There are just any number of areas. But to answer your question directly, we're seeing a lot of interest in political contributions. We're seeing environment was very popular for years. The UN came up with 17 sustainable development goals. So that's everything from poverty to, half of the things you mentioned, climate action, all of those things. Some companies target a particular area, but materiality is very important. For instance, a tech company is going to have a heck of a lot easier time being environmentally safe or responsible, I should say.
They don't have all the packaging and whatnot to deal with that consumer goods does.
Yeah, like an oil company has a lot different material issues with the environment than a tech company, but tech companies are having some challenges with diversity in their workforce or on their boards, and privacy issues are huge now. Many people are very interested with privacy issues, so that, of course, it pretty much encompasses everything. I think that it's a time when many of us are seeing that we really can't just sit back and rely on our governments to take care of these things, that public companies have really participated in creating a lot of the problems we see today, and they should be part of the solution. So luckily, public companies are really embracing this path. I'm sure you've read that the Business Roundtable and BlackRock, the biggest money managers in the world, I mean, everybody's kind of jumping on board and trying to quantify how we can measure, how we can do a better job of holding ourselves responsible.
That's fantastic. I'd love to hear a little bit more about, measuring, like what you had touched a little bit upon it. Can you tell us a little bit more on how companies are measuring their impact?
Yeah, this did start in Europe, and they're kind of far ahead of where we are. But I think something over 80% of the companies in the S&P 500 are now reporting, and most companies are. Again, it's called ESG, which stands for environment, social, and governance. So every public company has a score. There are lots of people that calculate scores. The major players are MSCI and Sustainalytics. I'm in the fund business and ETF business. So Morningstar, for instance, works with Sustainalytics to publish a score on all funds based on their underlying holdings. It's a little bit trickier in areas like real estate that you're in, but there are impact funds, of course there are, and there are companies that are doing a better job in each of these three areas. So what investors can do is just raise their awareness and check on these scores before they invest in funds or companies. And most of us, people, I'll step back and say, people now realize that performance doesn't suffer. In the old days, people would say, do I want to be a do-gooder or do I want to perform well? Well, that's out the window. There have been more than 2,000 academic studies showing that better corporate behavior actually produces happier workers, better products. They're not slapped with environmental fines. I mean, there are lots of obvious consequences of being good corporate citizens that actually produce better returns. Happy workers are more productive. So people now see the correlation between good returns in the stock prices and avoiding the worst offenders. I mean, if you had just avoided Boeing, Wells Fargo, a lot of the big blow-ups, the popular, I shouldn't say popular, the well-publicized blow-ups, you could have seen those by looking at the ESG score. So just avoiding those sorts of things could help you avoid some big losses.
Janet, I absolutely love what you said, that investors don't have to sacrifice returns in order to do good. I just love that. So switching over to the company side of things then, what advice do you give for companies who are looking to focus on creating socially responsible investments?
Well, you've got to have a clear strategy in place. Just like investors have to have a clear strategy. You know, in an environment of uncertainty, I think more organization, more structure is going to help us actually achieve our goals. So socially responsible investments are investments that contribute to a better world. There are many ways to do that. It depends on materiality, what business you're in. So you've got to look at your effect on people, the environment, and in my mind, social justice is huge these days. So I think that's largely people. I think one thing pretty much any company can do is start looking at diversity and how they're treating their workers, how they're treating their shareholders. You know, in the old days, corporations thought they were just in business to benefit shareholders, and that's now expanded. So most all large companies are now seeing that there's a bigger role to play in actually contributing to the world. Wouldn't that be a wonderful thing if all of us could work together to somehow contribute to a better world?
It would definitely strengthen us as a community as a whole.
It would. And you know, they're really easy ways to do it that are not expensive. I think that I have lots and lots of examples where shareholders have gone to companies with good ideas about maybe how they could sell sustainable lumber. That was one case where it became the most profitable business. Other cases are Target and companies getting toxins out of baby products. There was one baby formula that customers asked the company to make a non-GMO. It ended up being their most popular and profitable product.
Wow.
Things like, you know, getting styrofoam cups out of circulation at Starbucks. These were all requests by shareholders that actually made the company more profitable and had some benefit either to the environment or people. So there are countless examples of things that can be good for both. It used to be thought that activism was more against the companies. It's not at all. It's about working together to have better products, treat our workers better, and we all win with better returns.
Okay, thank you for sharing that, Janet. One last question. For investors looking to check up on companies' ESG scores, how do they look that up?
Well, at FundX, we've integrated ESG scores into our strategies of SRI. We use MSCI and Sustainalytics. Individuals that invest in, there are many, many sources. People investing in funds could go to Morningstar. The current environment has so much change and uncertainty. I think investors really need to do their research. We've started publishing something called FundX Insights, and we have a lot of information on our website that's free if investors want to sign up at fundx.com for FundX Insights. But there are USSIF is a wonderful website. There's a company that I love that is doing more advocacy work. And I'm just trying to think of Andy Bahar's company. You can go there, As You Sow, S-O-W. And they have, I think, 7 different screening sites on their website where companies can look at who's invested in what the ratings are, things like that. So that's asyousow.com.
Great.
There are a lot of good sources.
Good. Thank you so much. I love this topic. It's near and dear to my heart. And thank you so much for sharing this incredibly helpful information. And knowing that investors can get good returns and do good at the same time.
Yeah. In fact, thank you, Jessica, for your interest. I love it. In one of my talks recently, I shared a slide, who cares wins. I think if investors finally get the concept that it's actually good for not only themselves, but returns, then it's going to continue growing and profiting all of us.
Love it. I love it. Well, thank you again, Janet. And
You're welcome.
And to our viewers, if you'd like more information like this, please click the button to follow us on our social media channels. And thank you again, Janet, for sharing this helpful information for us. And let's all go out and do a little bit good in this world. And everyone, please stay safe.